car provision, medical facility, equity stock options, and the car provision first category, second category, third category, and deduction from salary, and all the 16.1a, 16.2, 16.3, which and we have discussed some of the problems comprising all the complications. Now this time we're going to discuss what is provident fund. It is a compulsory save for your retirement. Okay, it is not that optional for the employee, which is a okay. Now when you are working, you will receive salary, but once you retire, will you get any money from the employer or from the government? If you are government or non-government employee, you will not get anything, right? So because after your retirement, with the interest, you will take it as a lump sum. So some people will pay, basically it is 12% of your basic pay, I believe, 7,500 rupees per month if you are paying, and put together how much money it gets accumulated. At the end of it, you will receive along with the interest. So there is something called employee contribution and employer contribution. 6% of your basic pay, and 6% company will pay. So totally 12% of your basic pay. This is something that since I've been an employee in multiple companies, I got to remember these things. This was not in the book, probably I did not look into it, but this is how usually. Okay, so employee contribution from salary he'll be giving, employer contribution from the company's pocket. Okay, what company is giving you, because once you retire from the job, you will have some money to run your life, right? I mean, along with all this money gets accumulated in one account, and once you receive it, you will receive along with the interest. PF is compulsory these days. Okay, so compulsory for whom? If the company has 20 or more employees, the PF is provident fund is compulsory. Generally, people will close PF, but these days when you switch from one company to the other company, the employee usually close the PF account to receive the lump sum amount along with the interest. But there is an option, you can transfer your PF account from one employee to the new employer. This is something we have just discussed. Now looking at this chart, provision relating to the provident fund. What is a provision? See, there are three funds: statutory provident fund, recognized provident fund, unrecognized provident fund. What is recognized? What is unrecognized? This is something we'll discuss here. Recognized means company has to apply to the income tax department, and the income tax department will recognize it. Meaning you will have to furnish some details, whatever you have to fill up the form, giving your director number, GST, and all these things that they ask for, and finally you will get recognized, meaning income tax authority saying that you are a recognized provident fund. Okay, so there are some benefits attached to it if you are recognized. Otherwise, benefits will not be given. That is something we are going to discuss now. Okay, looking at the chart, this is the chart that you have to remember properly to solve all the problems. See, there are essentially four components: employer contribution, employee contribution, and interest. What are the basic components? Employee, employer. Employee contribution, you will get interest. For employer contribution, you will get interest. There are four components. Okay. Now looking at it, see, if the employer's contribution in the statutory PF means government employees, they will fully exempted, no tax. But it is recognized provident fund, private employee, but it is a recognized provident fund, about 12% of the salary is taxable. Okay, he is paying some X amount, but what is taxable from the employer's contribution is about 12% of the salary is taxable, which means we have to calculate salary first, and then we have to calculate 12%. Whatever beyond 12%, about 12% is only taxable. Unrecognized provident fund, it is exempt right now, but when you are receiving as a lump sum after retirement, it will be taxed. That is what it is given here. Interest on provident fund, for government provident fund it is exempt, but recognized provident fund, interest from even for employee, employer, both the contributions, if you are receiving interest, above 9.5% of the contribution is taxable. Okay, employer's contribution, about 12% of the salary is taxable. Interest on provident fund, about 9.5% of the contribution. Now here they are not talking about salary, about contribution is taxable. unrecognized provident fund, both the cases, even in the employer's contribution or interest on provident, interest will not be contributed. Interest on provident fund, whatever contributed now, and it is under the name of provident fund, now you will get the interest on it. Okay, interest on provident fund is exempt now. Employees contribution on statutory, that is government provident fund, qualifies for deduction under section 80C. Recognized provident fund, employees contribution qualifies for deduction under 80C, but unrecognized provident fund does not qualify for deduction. Okay, these are the main four things we have: employers contribution, interest on provident fund, employees contribution, lump sum received after retirement, statutory PF exempt, recognized PF, that is income tax authority recognized provident fund, it is also exempt. But in case of unrecognized provident fund, employers contribution and interest thereon is taxable. Once you received as a lump sum after retirement, when you receive it is taxed under the head of salary, employers contribution and interest. Interest on employees contribution is taxable under the head of income from other sources. This is what we have to remember. We'll discuss the problems in the next video.